What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvda, and the QQQ, and a couple of other tickers. I want to quickly talk about what's happened to the market so far and why tomorrow is going to be a very important day because it's going to be the first day that the bond market opens amidst this whole crisis going on in Israel. So, with this war going on and all these crazy things happening, I'm going to talk about how it could affect the markets, why tomorrow is going to be very important, some important things to look out for tomorrow specifically, and what the news is saying about the markets as we have some new technicals developing. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks. This offer ends in just about 6 days, so check it out before they run out. Anyways, let's break down what's going on with the market. So, for today, the market was very much just flat and sideways. And I was thinking that the market would hold up just like this for like the majority of the day. But near the very end of the day, the market started pumping quite significantly because we had some big news that came out. Israel announced that it launched an airstrike on Gaza after the surprise attacks that they saw. And this is very, very important because one of the things I said earlier that is oftentimes forgotten is that war, as unfortunate as it is, as terrifying, as horrendous, and as malice as it could be, right? You have to remember that warfare still could end up being bullish for the stock market. And oftentimes it is bullish. Oftentimes it's a positive catalyst for the markets because there are all these different factors as to why, and every war is different to some extent. That's the reason why, like, you have to be like very prepared for how this could affect us specifically. But this war in particular could lead to crude oil going up and yields potentially dropping, which could pump the stock market. Not to mention more spending as the dollar. We could see like more money being printed potentially to come back into the economy. So things like this could be happening. Could this lead to inflation going up? It's a possibility, but I don't think it's going to be that extreme. Not to like the same effect of that of like, with Russia and Ukraine and anything like that. But for now, I just want to break down something very important involving this war and how it's going to affect the market tomorrow because something very big is happening very soon. Now, for now, I just want to remind you all that we have a very important week. So for Tuesday, which is tomorrow, we just have a couple of earnings, but tomorrow is going to be the first day that the bonds market opens. The bonds market was closed today because of Columbus Day, but the equities market was still open. So when the bonds market opens, expect a very, very big reaction. We also have PepsiCo's earnings starting. For Wednesday, there's not much going on Wednesday, but it's going to be the last day before CPI. Thursday is when we have some more earnings, not to mention we have CPI on Thursday. And then for Friday, we have the big bank earnings. We have Citi, we have BlackRock, Wells Fargo, JP Morgan Chase, and the list goes on. So we have a pretty wild week. Almost every day has something big coming. So we have to be ready for this. We have to be prepared for some high volatility very, very soon. Now, for tomorrow, specifically when it comes to like events affecting us intraday, in the morning, when the market opens, we have Bostic giving a speech, which might not affect the market that much. These Fed speakers are just not as impactful as they were before. Then later on, we have the wholesale inventories at about 10 o'clock a.m. New York time. And at 11 o'clock a.m. New York time, we have the consumer inflationary expectations. So make sure you're prepared. This is going to be the most important time of the day, in my opinion. So watch this data very, very carefully. We'll see what this causes. So don't forget, it's 30 minutes and then like an hour and a half after market opens. That's when we have this data coming out. Then we have some Fed speakers. We have Waller from the Fed giving a speech at about 1:30 p.m. Eastern time. Then at about, this is going to be around 3 o'clock p.m., we have Kashkari giving a speech. This could also affect the markets to some extent, but maybe not extremely. And that's pretty much it for tomorrow specifically. All right. So we have to be ready for all of this for Tuesday. And now the question is, how will the market move? We have something very interesting developing. So the market is trying to turn bullish now. And I was telling you all that that warfare tends to be a positive catalyst for the market if it does cause yields to drop. And in order for this to continue, we need to see what the bonds market causes. We need to see what happens to these yields. But we do have something that's favoring the bulls a bit more for the stock market. And the reason for that is because when we look at our 10-year treasury yield, which I have down here, something is looking a bit more bearish on this. So if I look at the 4-hour time frame, you will notice that we established a bearish divergence on Friday. There was a bearish divergence that was established, and we happen to have a lot of these gaps down here. So there's a good chance that we might see the yield start dropping, the 10-year yield dropping, which could turn bullish for the stock market. There's a possibility that this war is going to cause the market to pump because of this. And I'm leaning a bit more in that direction, but I'm not going to promise it until we truly see signals. On top of that, if there's more money printing, if things like that happen, the dollar continues to sink like this, the dollar is looking more bearish. If you just look at the dollar, I mean, we have a possible head and shoulders developing on the dollar, and the dollar may start sinking lower. And on top of this, the dollar got this big rejection today. The dollar was attempting to pump as soon as we opened. So, like right here, it tried to gap up and start pushing. As time went on, the dollar started sinking. And then, as soon as this news came out with Israel launching the strike, the dollar started sinking harder, and that's what actually caused the market to pump today. Otherwise, if this news didn't come out, the market would have just continued to trade sideways, most likely. But this news coming out basically established the fact that this war is very real, it's very serious, and this will lead to more complications that could get the US involved and things like that. So that means that the market is more prepared for how yields will move. And there's an increased probability of some yields dropping, which could pump the markets more. Because just look at this news that came out as soon as the strike happened, the market started pumping again. That tells me there's an increased probability of the market turning bullish, but not a guarantee just yet. Now, I am bullish for the market for the medium to long term. When I say that, when I talk about these projections, I'm referring to the shorter term. It's not as easy to predict the shorter term during times like these, but I'm leaning a little bit more in favor of the bulls looking at the current setups. So, looking at SPY to start us off, we're going to look like this. SPY is not completely bullish just yet, okay, because we haven't broken 433. We need to break this supply zone, 433, and this thing's going to start pushing for 436.5, and then above that, we have 438 coming. So we want to be watching, can this thing break and hold 433? If it does so, it's going to be bullish. If it fails, watch 430.5 with the 5 EMA. If that fails us, it's going to come all the way down to 428. So watch that very carefully. My gut is telling me it's going to try pushing up just looking at the current trend. But just to be safe, I would say just wait for the market to open, wait and see what the yields in dollar are doing. If they start dropping and this thing ends up breaking 433, we're going to be turned bullish. So make sure you're prepared for this. Make sure you watch these levels very carefully. For Tesla, I mean, Tesla is very mixed. It has been getting very tight right here. We have a potential flag possibly forming, but it's still kind of like stuck between support and resistance. Now, you could argue that we have a nice accumulation structure and Tesla's about to get a breakout towards this like 270 plus area. But in order for us to turn bullish, you need to see Tesla close above 260 and hold above it. If it could do that, there's going to be more potential for it. Now, it depends on tomorrow what the yields end up doing. If the market launches thanks to yields, Tesla could break this 260 area. If it breaks above 263, I could see Tesla going all the way up to 265. And if that breaks, it could get very close to 270. So watch those levels carefully, 263 and then 265, if we get above this 260 area. If it breaks down, you want to be watching this 256 support. I'm sorry, if it breaks 258, you want to be watching that, 256. If that fails, let's watch 254 flat. This 254 zone is very, very key. If 254 fails Tesla, watch 252.5. That's where Tesla bounced off today. And if that fails us, there's 250, which is a very, very important support. Specifically, 250 to 252.5 are two support zones which are very, very important. If we lose 250, we're going to turn more bearish. As of right now, we haven't lost it, and we are favoring the bulls a bit more since we're trying to break above 260. Tesla is looking a bit more bullish, but just to be safe, watch what happens with yields tomorrow. Apple is also looking bullish on the 4-hour time frame, trying to break out. It's getting above its 4-hour 200 EMA. We have this resistance at 179.68, which I believe it's going to test. If that breaks, 180 is coming. So Apple looks more bullish right now. It looks like it's going to try to push up higher. If you're bearish, you want to see it get above its, you want to see it get below its 200 EMA. If you're bearish, you want to see it break below 177.5. If that happens, it's going to come down to the 176s. My guts tells me Apple's going to try to continue pushing for 180. So watch that very carefully. Apple's looking more bullish so far. For the QQQ, we do have a possible bearish divergence. Let me just double check this. So there's a bearish divergence here, which tells me it may end up coming down a bit to retest like 365 or so. It could even gap down tomorrow and then start pushing. We'll have to see on that. However, even if it does gap down and it starts pushing later, this looks like the overall structure is more bullish. right? So even if it does come down a little bit, it could still push up higher towards this 370 area, which is where we have this imbalance. So in my opinion, what would I say about this? I'm in the middle. Okay. Let me first say that there's a bullish and bearish case, but I'm leaning a bit more bullish. A bit more bullish thanks to Apple and thanks to what we're seeing from the 10-year Treasury yield. My gut is telling me the yields may start dropping and the market may start pumping immediately because the market is very quick to price things in and the market knows wars tend to be bullish for the medium term. So the market is thinking and the QQQ might be getting ready to launch towards 370. If it breaks and holds 368, it's going to likely make its way up to 370 very soon. If it breaks below 365, it's going to be a key support. It could sink all the way back down to the like 363 to 362 area. So there could be more downside. My gut is telling me, like I said before, I'm leaning a bit more bullish, but I want to be open minded just to be safe. So I want to make that as clear as possible. For Nvda, this is looking a bit more bullish. We have a nice inverse head and shoulders like structure. It's pushing up higher. It's been making higher highs and higher lows for the most part. And the structure still looks good on the 4 hours. So if Nvidia gets above 457, if we break that, I could see this thing pushing for 463. If Nvidia rejects and breaks below 447 tomorrow, you're going to be watching this 442 support at the 200 EMA. If it loses that, that's going to turn bearish. So where am I leaning towards? I think it's more likely we're going to see some upside thanks to the yields, but just to be safe, watch it all tomorrow. So I want to keep this video kind of short, guys. I am kind of late today. For Microsoft, if we're more bullish, this thing could be pushing. If it breaks above 330, we could be watching for this thing to push towards this imbalance at 336. It looks bullish overall, but just to be safe, you want to be watching this reaction we end up getting. If you're bearish, you want to see it break below 324. If that breaks, we could see downside. But for now, it's holding up quite nicely. For the VIX, I just want to call out that the VIX got a big rejection today off another bearish divergence. So like from right here, you guys could see it. It went up, it came right back down. So the VIX is looking like it could be forming another head and shoulders. If that's the case, the VIX could start selling off a bit more because the market may pump. I'm going to be open-minded on this just to be safe. For the 4-hour time frame on the dollar, we're looking a bit weaker. Like I said before, we have a possible head and shoulders on the dollar. If this starts selling off harder towards 105, it could be because of the market pushing. So this is looking a bit more bearish, which tells me the market may pump a bit more. That's because of the war involving Israel. For Coinbase, this thing looks like it's about to test this 80 resistance. If it breaks that, I could see it going towards this 80.5 area. Get above that, then 82 is coming. So far, nice looking structure. It's holding up quite nicely. It's also kind of looks like a cup and handle. It's not like as clean. So I could see some upside on Coinbase. It looks a bit more in favor of the bulls. For Google, this thing is continuing to uptrend. There is a small bearish divergence here, so it might gap down tomorrow. We might see it gap down towards like 138 and bounce. I could see that. But if we break below 137, we could be sinking towards 135. If we break above 140 and hold it, I could see this thing going to the next level at this 142 plus area way up here. So I could see that if it breaks 140, but resistance is going to be kind of tough. So watch that tomorrow. The 10-year Treasury yield also has the bearish divergence we were talking about. So we'll see if this sells off tomorrow. If it does sell off when the yields open, this could lead to something big in the stock market. So we're going to be watching that very carefully. For Amazon, I would say that Amazon's starting to uptrend a bit. It's actually, you could see that Amazon hit this 123 area. It came up and is starting to base right here and starting to uptrend a little bit. Amazon needs to break 130 to turn more bullish and start breaking past like 132. Let's see if Amazon can try to break above 130. If it does so, it's going to turn more bullish. If Amazon fails and breaks below 127, we could see this thing sinking towards 125. So watch it very carefully. I think a 130 plus move is a real possibility. For Meta, I just want to mention that Meta also has if you look at the current technicals on Meta, there's a small bearish divergence here. Could cool off a little bit, retest this like 316 area, then try to bounce. If it bounces, right, if we see this thing actually continue going, we could see Meta make an attempt for this 326 again. I could see this nice structure playing out, but just to be safe, because this also looks kind of like a cup and handle, I could see it get close to 326 if you do hold above 320. But we need to see this thing hold it. It didn't hold it today, so we'll see about that. If it breaks below 316, that would be bearish. I am leaning a bit more bullish based off what I talked about earlier, but we'll have to wait and see if this thing can hold 320 first. Anyways, thank you all so much for listening. Hopefully this video was helpful. I am a little bit late. I'm sorry about that, guys, but I'm going to be early tomorrow, hopefully. I'll see you guys tomorrow. Thank you for listening, and please take care. Tesla in the markets of the moon, as the long term is still very bright, and peace out.